G7 finance ministers and central bank governors are closely monitoring the spread of the virus and its impact on markets. Given the potential impacts of COVID-19 on global growth, we reaffirm our commitment to use all appropriate policy tools to achieve strong, sustainable growth and safeguard against downside risks. Alongside strengthening efforts to expand health services, G7 finance ministers are ready to take actions, including fiscal measures where appropriate, to aid in the response to the virus and support the economy during the phase. G7 central banks will continue to fulfill their mandates, thus supporting price stability and economic growth while maintaining the resilience of the financial system. We welcome the International Monetary Fund, the World Bank, and other international financial institutions stand ready to help member countries address the human tragedy and economic challenges. We told you about the joint statement there from yesterday.
No action, though. This is talk.
No, but this is typical, right? So the G7 itself has no power to take any action. So this is everybody saying we're all on board. Is it enough? Take a look at the futures market.
Yeah, it obviously, we got a little, at least a little bit of a...
We were up to 100 points per second.
I would not, if I was counseling somebody on a trade, I would say don't expect them to announce 50 basis points of cut from the G7, because the G7 doesn't have 50 basis points of cut.
But, Bill, you do expect central banks, obviously they're mentioned here as just fulfilling their mandates, but what do you expect out of central banks?
So certainly out of the Fed, I would expect them to follow up on this with some easing, with some significant easing. They're going to measure the effectiveness of their action by the amount of market movement that it generates, and that's going to require getting ahead of market expectations. So I think that kind of...
How do you get ahead of expectations right now? We've already kind of priced in maybe more than half a point of ease by the March meeting.
Well, they could take, and I would expect them to take, an intermeeting cut of perhaps 50 basis points, perhaps 75 basis points, but 50 basis points would seem... They have to weigh off getting that positive effect with appearing to be panicked. They want to improve market confidence, not shake it.